Hi, today I've got Tim Haynes, Director of Highland Property Agents Finance Division, Elevate Home Loans with me to share some useful tips on how you can finance your deposit to lock in your off-the-plan purchase. Thanks for your time today, Tim.
Pleasure.
The number of new developments coming to market in the past year has really sparked buyers' interest in getting in early with off-the-plan purchases. So can you share with us some of the typical questions you're getting from clients wanting to buy off-the-plan?
Sure, Larissa, and thanks for having me here today. We certainly have seen an increased interest in off-the-plan purchases, and given our partnership with Highland Property Agents, we're able to provide a seamless service assisting buyers right from the initial point of inquiry. So typically developers will require a 10% deposit for off-the-plan purchases. Taking a 10% scenario, if you were to buy a property for $700,000, you'd require $70,000 as deposit. So if the buyer does not have the 10% ready at hand or doesn't have that money in savings, it might be tied up in a pending sale, waiting for settlement, then there are other alternatives that they can consider. For example, if a client owns a property, they can typically use that to help secure a deposit bond.
That sounds really interesting. Can you tell us a bit more about how deposit bonds work?
Sure. Deposit bond is a certificate that is issued to the developer, which is essentially an insurance policy that acts as a guarantee to the developer that if the buyer fails to pay for the property at completion, the deposit will be transferred by them to the developer when requested. So the client should check with the developer if they will accept a bond. Number one is sometimes they have their own finance restrictions on whether or not they can accept a bond. And another point worth noting is that if we're dealing with a first home buyer that obviously doesn't own a property, we can actually use the parent's home to help secure that deposit bond.
Okay, so if the bond's not accepted by a developer, what other options are open to clients who do have equity in their existing home?
That's a good question. So if a bond is not accepted by the developer or they don't have the savings available, there is another option if they own an existing property with sufficient equity. So what we can do for them is arrange a top-up of their existing mortgage so they can pay cash deposit for their new purchase. And then once the property is built, they can organise the new home loan at that point. So often when we're doing that, we can actually reduce the home loan interest rate that they're paying at the moment and save them some money during the process.
And finally, a common concern we're hearing from many buyers is what happens in the event that something goes wrong with the developer. If a client pays a cash deposit or uses a deposit bond, would it be secure if something happens to the developer?
Absolutely. The client's deposit will be held in the real estate's trust account until the project is finished or the registration sunset period expires. And that ensures that the client's deposit is fully protected.
Some great insights there, Tim. Thanks so much for your time today.
You're welcome. It was great chatting with you.